folks, I'm Millie Little and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective each day, asking ourselves what happened today and what does it tell us about tomorrow. I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Nothing like humble pie when the market stuffs it in your face, tells you you're wrong, and just proceeds to shoot up the other way. Last night we were talking about nothing on the index is telling us a pullback yet, but it looked as if we might get something based on some of the index sector reads. Not to be, straight up. They fell in love with Aunt Yellen. They danced her dance, and they drank her Kool-Aid, and they moved higher. Folks, this is 5% in 5 days on a big index. That's hard to get. You can get them on the way down, but getting them on the way up is much harder. And you know, it's a nice big straight up move. We've seen these V-shaped reversals before, and we're seeing them again. I mean, it's straight down, straight up, right? Same sort of thing. And if it does like it's done in the past, it will cross the highs before it's over. But right now, I think we have to still consider this as a range trade. We have to think about it from that perspective. Before I go any farther, let me tune in my friend here who asked a question, Al Chung. TNT room, this is where you want to go. So you get there, you come into subscribers, tools, TNT room, that's where we do the chat all day long. You can tune in there. And if you want to see the morning broadcast, you know, on that email that you get, which is basically this, you come right here on the morning broadcast. I do that about 6:40 my time, which is 8:40 Eastern time. So that's the 2 places you want to look there, my friend. Let's go back to the markets. Let's pop up the numbers real quick before we get going any farther. I was looking at these sectors, almost 1% plus on all of them. The only one that lagged was the 0.73 here on the consumer discretionary, which was one of the 2 that should have went sideways to down today, but in fact they all went up. Going into closing quotes here, we had the Dow up 192 at the close, 193. 15,994. The S&P's tacked on almost 20 again, 1819 and 3/4 now. We were at 17, what was it, 1730? 1737, almost 1738. Now we're at 1819. 80 points, 5 days. That's a big move. Composite 42, almost 43 higher, 4191. NDX 39, almost at the highs again, 39.5 higher, 3621 and 3/4. The Russell 10.5 higher, 1129. So egg in my face on the call last night, but you know, now you got to make the next call. You got to go forward. You got to figure out what's happening. You either got to get right or you got to get obstinate. And unfortunately, I think I'm getting obstinate here, and I'm going to show you why. So here's your swing point low, right? You're coming into a retest regen off that swing point low. That's the first time back in more than 6 bars, right? Much more than 6 bars here. That has about an 82% probability that it should regenerate, which means go back down. Now, the thing is it could get all the way to the top before it regenerates. Usually after 6 bars have passed, you only get into the lower end of this, and I suspect that's probably going to be what we see. We may get into this little area here, which is a resistance zone. The top of this bar is the bar I'm looking at in terms of where we might get to. That's about another 3 points higher. That high is 1827 roughly. We closed at 1819, got as high as 23.5, so about 3.5 higher than today's high. But we may have seen the push today, and the reason for that, in other words, the short being coming on today in terms of a return here back the other side, is if we go look at the NASDAQ composite, the broad composite. Broad composite comes into the breakdown bar. Breakdown bar was here, right? Gets into that bar, right at the top of it, gets into it, has less volume than the volume on the bar, goes over it, closes underneath it. That's a test failure into the breakdown bar. And folks, that is the last spot to fail. If you get over this, you're going at new highs. Just plain and simple. And this is a broad composite, just like the S&P. So S&P, NASDAQ composite, they always get my attention more, just like the Russell. Those three are the broad ones. The Dow Jones, the NDX, they're not nearly as broad. They're very concentrated. And so the broad composite here fails on a test failure, on a test into the breakdown bar, right? That's really basically the last stop before you get out of this range. The range we've been talking about is top to bottom here. It's pretty large. We come right into that area, right, and failed. So that is one. The other one is the Russell. And the Russell did exactly the same thing, but on the Russell you can see it's been much weaker. It went right over to its secondary breakdown bar, right? The top breakdown bar is way up here. That's how much the Russell is lagging right now. So just getting back to the secondary breakdown bar, Russell gets over the high, back underneath it, much less volume, right? That's a failure here as well. That's two failures. A failure on the broad composite, a failure on the broader or the broad 2000 of the Russell, the small caps. And we already talked about not a failure, but a move into an area that should fail, should regenerate lower, which is the S&P 500. The S&P would have the same test failure if it was to come into this high. That would be the exact same test failure as the NASDAQ. So you can see Russell down in this area, NDX, and not the NDX, but the IXIC, the broad composite, and here the S&Ps right up at kind of basically the last line in the sand. They cut through everything else as if it really just didn't matter. And you know, sometimes that happens, and you're just on the wrong side of the call. And I definitely was on the wrong side of the call as of last night. I wasn't adamant about it, but it looked to me like we were getting the beginnings of some sort of a retrace starting to step up and take place. If we look at, and I'm going to show you on the Qs here, if you look at the Qs have made a huge run all the way back to the top almost. NDX is the same, 89 here, 88.83, got to 88.97, 3 pennies away. You almost feel like these things are going to reach up there, and you know, like on the S&P and on even on the Russell and the NASDAQ again, test one more time, potentially fell while these test the highs and the SPX test that breakdown bar. I don't know that they will, but it's certainly, you know, they're certainly close enough for that to happen at this point. Huge run here. It's just it's every time this happens, and I've seen this so many times, I'm sick of it. You know, these V-shaped moves. You know, straight down, straight back up. It's like the machines are just running everything. And it's all on low volume compared to what you come down with. And it's been this way every time. It doesn't change. You know, but you get used to it after a while. I guess your skin gets thick after a while. So that's the indexes. Oh, and then the Dow, I didn't cover the Dow, but the Dow basically is in no man's land. It's just kind of hanging out up here. It gets over the swing point high. It's up here. I don't know what it's doing. It looks to me like it's trying to go to the next level, but it's got a long way to go. You know, the Russell has turned into the weakest index. It used to be the Dow by far. Now it's the Russell. And that's interesting because the Russell is much more, in my opinion, is much more a reflection of the domestic economy. And so the Russell is certainly telling us that for some reason, you know, now maybe the Russell was telegraphing issues with all of the Obamacare, but that got wiped out today, and it didn't really help them that much either. They still lagged today in terms of the percentage move. So, you know, from that perspective, something's not quite right. And when I look at it from that perspective, and I go back here one more time to the SPX, you know, I'm unwilling at this point to call this this move in the SPX, in terms of the range trade over. This range trade still looks like it's in effect. We've just made a huge run though, much bigger than I thought we would, and we're coming up to kind of the last area. If we get over this area, then I think the range trade is probably off. But if we fell here and come back, the range trade's still on, and then it's going to be a question of like how do you come back into these areas? The first area would be here, the next area would be there, right? How do you want to retrace? And that's really what you got to look for now. And if we break out up here, I'm pretty sure that range trade is going to break to the upside before it's over, in which case you really want to start looking for places and things to get long in. Well, not immediately, but you definitely got to start looking on that side of the equation. Right now, the jury's still out. I'm not sure which it's going to be. But won't take much more to make me cry uncle, so to speak, right? If I go over to the sectors, the sectors had a pretty good day. There's only a couple of them. As a matter of fact, let's look at the 2 or 3 that are most interesting today. XLV, somebody asked about it last night. We were talking about it was the strongest for a long time. They didn't have the volume coming back up. Hey, it doesn't matter. Back over the highs. First one to get back over the highs here. So tomorrow this one turns bullish. So the healthcare sector definitely saying, hey, we can go right back the other way. If I look at the semiconductors pressed right up to that breakdown bar. That high on the breakdown bar, 42.26. The high today was over it, closed at 42.26. That is actually a test failure, so that's a slight failure. Again, just like the NASDAQ composite. XLB presses over the highs and up to the next level. XLE is coming into a retest regen zone. I'm just glancing down these. XLI didn't do the 2-bar reversal. Here's the XLF. XLF gets over, it's way over this one, right? Now it's getting into the next one, just like the broad S&P. And what I mean by that is you're coming into these bars, which were your swing point lows. So that area right there is probably the last bastion here, and then you'll get into the retest regens, and those could take them almost to the highs if they retest all the way to the top. Again, more than 6 bars, usually that means that this is going to fail and come back, and it would be the same here as it is on the S&Ps. Let's walk over to the Ox markets real quick, see what we got over there. I know gold was up big. Let's see how it fared today overall. And let me grab it here. Here we go. Alright, so it gets over. So yesterday was a little doji. Didn't look like it was going to be able to hold. Today it gets over it. Does 11.4. Let me pull over the weekly chart. So this high is 122.32. Easily over that. This is day 2, so it probably will have the volume, it looks like. 125.15 is the bar it's coming into, and it's almost there. So I think gold has probably had his run. And what I'm glancing for here is to see, okay, where are these big areas, right? And in terms of where this thing, because it's had a nice run, and they're right there. They're all right there, and it's right into the thick of them now, and it's doing nothing. I mean, just look at the volumes on these bars, and I know that volume doesn't necessarily turn back price. We've seen that over and over, but when you're coming into that much congestion in a market, unlike the stock market, this thing is in a downtrend, right? Has been in a downtrend. So when you're coming into that kind of, selling area, if you will, there's a lot of people underwater. And they're going to be, there's a lot of trades that are on the wrong side. And when you finally get this kind of a duration push, you got to think some of that money is going to come out, and they're going to try to take those positions out finally. So I think you get a retrace off this pretty quickly, and it fails here. So that's gold. Dollar, I think the dollar is flat again today. Dollar hasn't been able to do anything. Basically flat. That's on a weekly. Big range going on there, nothing special. And yeah, I tried to trade down today and then rallied back at the end of the day. Just a huge range here on the dollar, nothing there. Let's look at the bonds. That's the other big one in the equation. Typically they go opposite of stocks, and once more they won't give it up. That's time and time again now. That's 3 days now they've been trying to break into the support zone, and they can't. And so one more time here, it looks like it's going to hold. We'll see what it does tomorrow. Again, bonds are still arguing that the market wants to flip around and come back. So indexes, last night it was 2 sectors. Tonight it's 3 of the indexes. Well, 2 of them, and 1 of them into an area that it should be able to fill at some price point. Sector-wise, there's only a couple of them that look questionable. The rest of them all got these huge bounces, and you got a nice bullish one out of the XLV. Overseas, big moves. You can kind of see that here in the emerging markets. Nice big strike back to the upside here. This one's going to come back into a retest regen zone. And so the emerging markets, even though they've had a nice little push here finally after being beat up for so long, they're going to be coming back into resistance. If they get over that one, then they got a huge resistance up here at these swing point highs. There's just a lot up here to try to stop it. So I would think as you get into these areas, in particular this bar, right, that's what it's coming into now. Those are going to be tough, and if it gets above them, then you got really serious resistance above that. Folks, you're going back, what is that, about 9-10 weeks now. Those are losing positions for over a period of 2 months. You're going to see money try to come out of this at some point as a result of that. Does have little ABCD structures on the way up on the emerging markets, so we're seeing those little ABCD structures play out. So those are positive. That's what you got to do. If you look at Europe itself, and I go to the CACs had a nice little bounce last night, continued on. They're doing the same thing we're doing. They're coming into that bar. They're going to try to fill at that same bar that we saw today. NASDAQ and Russell fell at. Let's see what the DAX did. I believe the DAX was actually even stronger today. It had been weaker, and it was, and it's coming back into. Now, see, the CAC is up on the top of this 24th bar. The DAX is just trying to get back to the 29th. And let's take a quick look at the FTSE as well. And we're getting a nice push here and with some volume. So FTSE looks like it can actually try to go higher. And that's a result of the gold, right? The gold is heavily weighted in FTSE. Let me see what kind of questions we got over here, and then if I got some time, I'll go elsewhere. Okay, so Mr. Chung, I answered your question, I believe, with respect to the chat room and so forth. Federico wants to know, can you take a look at MDW? Let's see what we got here. And tell me if it's okay to buy at 114. Daily and weekly chart. Alright, so MDW is midweight gold. So, these were some, last night I pulled some of these up and was showing, these gold trades. The thing is here is that gold itself, as I just talked about, should try to pull back pretty quickly. I mean, it could happen even as quick as tomorrow. And if the market itself wants to pull back, I would think the gold stocks get hit as well. I think what you got to do on any of these right now is to look for the retrace, which is what you're doing. You said 114, and that's the bottom, basically the bottom of this bar. Yeah, that's a good spot. And on the weekly, if we look at it on the weekly, that's 120, 114 as well over here. Yeah, that looks like a really good spot actually. So yes, midweight gold looks like that would be a place to try to catch a retrace. The issue with all these gold stocks now, of course, is that they jump, 40-50%. I mean, this went from what, 9 weeks ago, it's going from 72 cents to $1.32. So that's 50 cents on a 72-cent stock. Okay, so that's like 70% or so. Well, 70% is a long way. You know, if you come back from today's close at 28 to 14, you're coming down roughly 1%, right? Is it more than that? That's 10%, isn't it? Yeah, it's roughly 10%. So yeah, that would be a good spot. That's not a bad spot. Okay. All right. Let me talk a little bit about just a general concept. And it's one of the reasons, you know, trading is not hard per se, right? I mean the concepts are not hard, and if you're looking at classical TA, there's a lot of concepts. There's a lot of, you know, rules and so forth. And one of the things we did in neoclassical, one of the things I tried to do when I designed the system, was to try to take out all the special cases and try to make it as simple as possible. Because if you think about a model, you really want as few moving parts as possible, right? You want as few inputs as possible. So you want it to capture as much of reality as you can. And so if you're thinking about neoclassical, there's really three inputs. You know, you got price, volume, and time, and you're trying to use all of them. Inside of it, you really just have basically two concepts you're working with. You're working with trend, and you're working with you know, zones that are attempting to give you supply and demand constraints. Now those constraints are changing all the time, and they're changing all the time because price is always changing. Price is always seeking that fabled equilibrium. And so as it pushes higher, pushes lower, you know, it's trying to find equilibrium. Where does the demand meet the supply, and price sits still at that price point? The problem is that that's always changing. It's not constant. Right? And so the equilibrium is constantly changing, and it's actually a feedback loop on itself. In other words, when you think about it, and we'll use the example of what's happened over the last 9 weeks, right? Or actually the last 3 weeks. Once price starts to spill lower, right? And then you congest, right here at a critical point, and then it breaks, right? Then everything comes out of it. And then it tries to do it again, and then it goes back the other way, and then, right? These are momentum, right? The momentum is what's moving these things. And it's almost like a feedback loop on price. So in other words, the farther you go down, the more worried you get, the more you're pressured to sell. The more it goes up, the more you feel like you'll never be able to get back in, therefore the pressure to buy, which forces it up more. Right? It's kind of a self-fulfilling prophecy, if you will. And those feedback loops are always at work. Sometimes they feel like they're at work even more than normal, and right now feels like one of those, right? Where it comes down hard and then it's right back up hard. And a lot of people say it's the machines, and maybe it is the machines. I don't know. The machines have been around a long time, though. It's not like they just got here. You know, they've been doing this for 15 years now, the machines. And yeah, there's more machines now than there was, but still, I don't think we can blame it on the machines, because the people program the machines. What they're really doing is it's a self-fulfilling feedback loop. Once you get going, you just keep going, right? And it doesn't want to stop. And yeah, there comes a point where the expectations that are part of this feedback loop gets so far ahead of themselves that people wake up the next morning and they say, what the heck did I buy? You know, why did I buy this? And that's when you'll see it come back, right, and do some of the backing and filling. But these feedback loops are what makes these straight up moves, these straight down moves. It's the fear of not getting in, the fear of not being able to buy again, because we've seen this market for so long, right, simply go up. Right? If you look at this weekly, I mean, there's no debating which way we're going. All I can see is a bunch of swing point lows all the way up. Right? So the debate just isn't there. You know, you don't even hardly catch a high, because you can't sit still long enough to catch a high. You just keep barreling up. So when you have a market that's strong, right, the fear that's involved in this market isn't the fear of loss. It's the fear of gains. It's the fear of missing the gains, right? That's what's driving this thing, right? The gains. I gotta buy it now because if I don't, it's gonna take off again without me. And that fear is just as powerful as the fear that you saw here over the last 2 weeks when it sold down as hard and fast as it did. It's the same thing in reverse, just a different form of it. Here's the fear of losing, here's the fear of missing the gains. And that's what drives these markets, folks, and that's what drives them as crazily as they seem to get driven at times. And, and a lot of times they just cut right through areas that should be resistance. I mean, this didn't even hesitate today. And some will say it was yelling. Yeah, I mean, that had something to do with it. But, folks, I told y'all last night it wasn't going to be anything different. Probably the only thing she said differently that I haven't heard Uncle Ben tell us is that she stressed the fact that the Fed was going to be even more flexible, maybe, right? They were going to taper the taper. I mean, that's how redundant this stuff is getting, where we're going to taper. Pretty soon we'll taper the taper's taper. It's insane. All right, folks. I'm going to leave it at that. Thanks for joining me. Have a great one. Take care of yourself. Good night.